General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.
Morning, everyone. It's Jonathan Tacadena here from MPC Markets, and I am stepping in for Mark for today's morning report. It's Wednesday, the 13th of August, and we have markets all at record highs. So the big news yesterday, the RBA cut rates, so all the mortgage holders in Australia breathed a sigh of relief, and hence the ASX rallied to new highs. So interesting from my perspective is that the banks haven't participated in this rally as much as usual. So CBA still trading around that 180 mark. I think it got up to 192. And a lot of the rally's been in a lot of value stocks. So things like our good old commodities like BHP, Rio have all started rallying. And actually the standouts actually be consumer discretionary. So you see stocks like, before JB Hi-Fi got hit on earnings, with the CEO leaving, it actually rallied up to new highs. Wesfarmers did the same thing. And even stocks like Nick Scali and Harvey Norman, all doing well. So it looks like the consumers were spending beforehand, in anticipation of this rate cut. And, now that the RBA has cut, we'll see more of that. Now, overnight in the US, the big news is the inflation print came in a little bit lower than expected. And now it's actually, not if the Fed will cut, it's how much they'll cut by. So what I'm seeing out there is that the market is pricing in a 25 point cut, but I've started to see some rumors or some sentiment that they might go 50. And obviously that the equities markets love that, and we saw we'll see the S&P at record highs, Nasdaq at record highs, and a lot of stocks doing really, really well. Like a lot of the Mag 7 look constructive here. Apple, Google, Nvidia, all streaming along nicely. Tesla doing well. But what I have noticed is that underneath the hood there, now that I've started applying my screens onto the US markets, what I did notice is that the real estate market, you might hear all doom and gloom stories out in the States, but a lot of the home builders, mortgage brokers, even things like Freddie Mae and Fannie Mac, all rallying off the lows over the last couple of weeks. So, basically, and I've heard the phrase before, nothing stops this train. The way I've talked to clients about it is that the system is sort of geared to head on higher, and it's just a matter of actually figuring out which sectors are running the hottest, and it's all about maintaining exposure, but trying to figure out which ones are rallying the hardest. And the hardest thing, I have talked to a lot of people is that if you're a fundamental investor, you're getting left behind because yes, markets are making new highs and everything looks rosy, but if you look under the hood, it is very, very expensive. And I've been on Ausbiz quite a lot saying that it's expensive, but things just keep getting more expensive. And case in point is Sydney house prices. If you have got your Sydney home, congratulations, hold on to that. But if you're trying to get into the market, you're trying to save for a deposit. But I think the ratio now is you need 14 times income to buy a Sydney property. I believe that was like 8, and I remember going, well, you can't go much higher than that. But here we are at 14 times. So basically, that's the era we're in. It looks like this market just wants to keep heading on higher. So with that, I'll just give you a basic rundown. The Dow finished up 483 to 44,400. S&P up 72 or 1.1% to 64.45, and Nasdaq up 1.4% to 21,600. And even the Russell, wow, look at that, up 2.99%, up to 2282. Oh, VIX all the way down to 14.73, which is down nearly 9%, and that's extreme lows there. So if you do, if you are thinking this market is frothy, and you want some downside protection, it's getting really, really, really cheap. So with that, I mean, we are almost halfway through August. Seasonally, August isn't a great month for the markets, but we're bucking that trend so far. And obviously, it's the fact that the market's pricing in cheaper money. We had RBA with cuts yesterday, lower inflation print last night, and now the market's pricing in the Fed cutting. And obviously, Trump's been beating that drum for a while. He wants someone in there that's quite dovish rather than hawkish, and he's always speculated that Powell is out, but here we are. It looks like he'll get his way either way. That print yesterday just basically opened up the door for the Fed to cut. So next page. Okay, so there we go. Overall, one thing I have noticed is that the Nikkei is at record highs. We're over the 2024 highs, and that is going gangbusters. Now, I actually know a few. Now, my wife's Japanese, but so I've met a few guys who worked in Japan, or sorry, Tokyo, for some of the larger banks, and a lot of that sort of strength in the Nikkei is actually just corporate governance. So Japan has been, how can I say it, relatively cheap for a very long time, and they have an inefficient sort of way that they run their markets and they run their economy, just so that there's more people with more jobs there. And what's sort of being unwound is there's a lot of very healthy but very lazy balance sheets that are starting to, corporate governance is actually saying, look, we're at record highs now. We actually need to invest in more productive assets, and we're starting to see a lot more efficiencies gaining in that market. And also, there's a lot of great companies that are relatively cheap, even at these record highs. So that's one to keep looking out for. Obviously, the JGB market, with the bond yields pulling back over the last few weeks, has helped that. I remember when the JGBs looked like they were breaking out, they actually reversed, and now that we're seeing lower bond yields, basically it's off to the races for the markets. There you go. There's the heat map from last night. Oh, Meta had a nice move. Broadcom with a nice move. Bank of America, they're the basically it's just green all around. Let me just look for any reds. Johnson & Johnson, not too much. Looks like Wells Fargo. Okay, but just in general, green all around, and you would expect that with the markets at record highs. We got Wednesday. Oh, look at that! Commonwealth Bank earnings out today. Let me just, while I have you here, might as well just click on AFR and see what they're saying about CBA. Let's have a quick look. TWE, AGL profit. So looks like a few more problems for TWE. But overall, the market's going higher. And CBA looks like it has maintained its dividend. Oh, actually, it's increased its dividend to 4.85. I don't know if that's expected, if that's priced in. But as I mentioned yesterday, the CBA, which has been the market darling and just gathered all the passive flows, hasn't actually reached record highs, even though the index is at record highs. So this could be the catalyst for it to move higher. Obviously, CBA maintaining its dividend is quite good for it. And obviously we've got Suncorp, IAG, so a few. We've got Cisco earnings out tonight, and then tomorrow we've got Telstra and Pro Medicus as well. So we're halfway. So we're starting to get into the meat of things here in earnings land here in Australia. And oh, there you go. So the big one last night is lithium. So the news over the last few days, and I'm sure Mark's mentioned it, is that a lithium mine closed down in China. They got a stranglehold on that whole supply chain, and obviously we'll need to buy more lithium. What we saw is the hard rock lithium miners here in Australia got a big boost. So Min Resources rallied near $38. Liontown hit 105. It's pulled back a little bit now, and Pilbara were the main beneficiaries of that. Gold, silver, pretty much just stuck in that range there. Look, it looks like gold is hanging around that 3,400 level. Silver hanging around just under the 38 level on the spot. And copper with that big beating over the last week. It looks like it's starting to find some lows here and trying to bounce. And with some cheaper money coming along the way, maybe the economy picks up and copper could be a play here. So one thing I have noticed is the copper miners, things like Sandfire, Capstone Copper, all rallying, while the copper price hasn't actually moved. So there could be a play there. So and Bitcoin actually hit a record high. I didn't maintain a record close or the gains, but it did hit a record high at 124. And is that the last slide there? Okay, well there you go. That's my attempt at the morning podcast and sort of what I'm looking out for. One thing I will want to pat in the back is good old Richard. He came out saying that Spotify did well after earnings, and 10 Cent Music is one that we recommended to our Global Alpha clients, and that hit earnings and actually gapped up, I think, close to 7%. So well done, Richard Nader, for that call. If you do want to be part of that subscription, just contact one of us here at MPC, and we'll gladly put you on a trial. And obviously, if you don't want to stay up late, US markets open at 11:30. We can place those trades for you as well. So with that, thank you very much for listening. All I can say is, ASX is at record highs, S&P at record highs, Nasdaq at record highs. I'm not sure what will stop this train, but with the market sniffing out cheaper funding along the way, it's not going to be today. So just buy the dip is in motion, and that's the way to play the current market. So thanks for listening, and talk soon.